Welcome to the Business Finance Bulletin, episode 110. Welcome again to this week's Business Finance Bulletin. With me, Rob Warlow from Business Loan Services. In this week's bulletin, a look at high growth firms, regional lenders, and also the leasing industry. And in my business finance tip of the week, I'm going to look at some of the ratios that I'm going to be sharing with you, which will help boost the financial performance of your business. Let's start this week's bulletin by taking a look at the increasing number of high growth firms residing here in the UK. New research just out from the Enterprise Research Centre has revealed that there are 11,855 high growth firms in the UK, and that's at an all-time high. First of all, what is a high growth firm? Well, the Research Centre define it as a business that employs more than 10 people and has an average annual growth of 20% or more between 2012 and 2015. Now, high growth firms are really important to the UK economy because it's a good barometer of growth. And high growth firms, they bring jobs and obviously spread wealth out amongst the country as well. Now, where are these firms hanging out? Well, perhaps not surprisingly, the report does say that London in absolute terms has the highest number of high growth firms. But interestingly, it's beginning to show that these high growth firms are now situating themselves outside of London. So the report reveals that between 2009 and 2015, there was a 36% increase in the number of firms situated outside London. The number of firms in London, well, that only jumped up by 15%. So you can see there's a big difference. Which region has benefited the most? Well, that's the Northwest, and particularly Liverpool. They saw the largest jump in the number of high growth firms, a 56% increase. So well done to Liverpool. So you can see high growth firms are really important to the UK economy, and for lenders then, they're beginning to wake up to the importance that these firms have for growth. And in fact, in episode 98, I took a look at a new service provided by Barclays Bank just dedicated to scale-ups and high growth firms. So well done if you're a high growth firm. Keep it up. You're really doing your bit to keep the UK economy on a growth path. In previous bulletins, I've highlighted a number of small niche regional lenders who are out there supporting businesses in certain geographical areas. Well, another new fund has caught my eye, and that's being launched by the Coventry and Warwickshire Reinvestment Trust. They already do a lot of great work supporting startups, but now they've just launched a fund for existing businesses called the Enterprise Loan Fund. The fund, as I said, is targeted at existing businesses who are looking for funds for additional working capital or to purchase assets and may have been rejected by their local bank or just didn't want to go to the local bank at all. The terms, maximum repayment is 5 years, which should be okay if it's a working capital facility you're looking for. Interest rate, depending on how they assess your risk, up to 16.5%, and arrangement fee of 3% and appropriate security. So a really good example there of a regional player just focusing on helping businesses in their geographical area. If you are in the Coventry and Warwickshire area, all you have to do, just go along if you want to know more to their website, which is cwrt.uk.com, and there you'll find out more about all the range of products and support services they have available for you. Sticking with the theme of regional and local lenders, the British Business Bank is at it again. I've mentioned in previous bulletins that the British Business Bank, which is an umbrella organisation holding all of the government's access to finance schemes, has a particular programme for supporting smaller alternative lenders with additional funds so that they can on-lend to smaller UK businesses. Now, this programme is called the Enable programme, and another beneficiary has been announced this week from that fund. The company is called Haydock Finance. They've been provided with a pot of £25 million that they can on-lend to UK small businesses. Haydock Finance are an asset finance provider and provide support for businesses looking for purchases of buses, coaches, other hard assets. So if you're in that sector and you want a little share of Haydoc's 25 million fund that's now been given to them, all you have to do is go along to the Haydock Finance website, which is haydocfinance.co.uk, and there you'll find the range of products and services that they have which may be able to help you. Staying with leasing, some great news from the Finance and Leasing Association. Its members have reported that in 2015 they saw a 12% increase in the volumes of deals that they wrote during 2015. That's a really strong growth when you consider where bank lending is ticking along at about a 0 to 1% growth. So well done to that industry. They estimate that its members wrote in 2015 about £29.1 billion worth of funds. Now you compare that to the peak in 2008, just before the crash, of 30.8 billion. So you can see they're not far off the pre-credit crunch peak, which just shows how strongly that industry is performing. So if you are looking to purchase assets, just think about leasing or hire purchase instead. It's a great way of preserving your cash flow, and it's a very quick and easy way of being able to purchase an asset and paying it over a period of time. If you want to know more about the Finance and Leasing Association, just go along to their website, fla.org.uk. My business finance tip of the week. Well, I haven't actually got a specific tip for you this week. It's more of a heads up of what's to come. Now, if you've ever approached a bank or a lender for finance, one of the first things they'll ask you is, can I see a copy of your annual accounts, please? What do they do with them? Well, they take them away, they pull them apart and do lots of number crunching and calculate lots of ratios. Why do they do that? Well, it gives them a good indication of where the strengths and weaknesses are within your business. So what I've done, I've started to put together a series of videos looking at some key ratios that bank managers calculate. The idea being, you can calculate them as well, so forewarned is forearmed. You can calculate all these ratios and then you can kind of anticipate the questions that you're likely to be asked. But more importantly, it may highlight areas in your business that you can improve upon. So I've already put the first video up looking at debtor collection, a ratio there which will highlight where perhaps your debtor collection process is getting a bit weak. I've put a link in the description box below for that first video, and also a link on here as well. And if you're listening on the podcast version, all you have to do is just go along to my YouTube channel, go into YouTube, search Rob Warlow, and search for Debtor Days, and there you'll find the video. So those are to come, so keep an eye out for those videos as I launch them over the coming weeks. Well, that's it for this week, and I hope you enjoyed the bulletin. And as ever, if you did, please do give it a like or a share on social media. It all helps. If you're watching the video version, don't forget we've got a podcast version so you can listen on the move when in your car. All you have to do is go along to our SoundCloud, iTunes or Stitcher page and search for Business Finance Bulletin, and there you'll find us. And if you're listening on podcast, well, of course you've got the video version. Just go along to YouTube and search for Rob Warlow, and there you'll find this bulletin together with all the past and previous bulletins. That's it for this week. Thanks very much for being with me. Look forward to being with you again next week. Have a great, successful and profitable week. Bye-bye now.